Hello and welcome back to the Trinity Student Managed Fund podcast with me, Emanuele Roncalli di Montorio-Veronese, where I speak with leaders in the world of business, finance and technology to give our students a better insight into the careers we may wish to pursue. Today's episode is sponsored by Setanta Asset Management, a Dublin-based boutique investment manager specialising in equity and multi-asset strategies with a fundamental value approach since 1998. With a proven track record of strong performance and 13.2 billion euros in active assets under management, Setanta serves a diverse client base, including institutional insurance, pension funds, charities and family offices across Ireland, Germany, Canada and the United States, applying a long-term investment philosophy that clients value. Today we're excited to welcome back Dr. David Kelly, Chief Global Strategist and Head of the Global Market Insights Strategy Team for JP Morgan Asset Management. With over 20 years of experience, Dr. Kelly provides valuable insight and perspective on the economy and markets to the institutional investor and financial advisor global communities. Dr. Kelly's research focuses on investment implications of an evolving economic environment. He has written extensively on all aspects of the US economy, and his proprietary US economic forecasting model helps shape his view on both the economic landscape and prospective asset class returns. He currently sits on JP Morgan Fund's operating committee. Throughout his career, Dr. Kelly has developed a unique ability to explain complex economic and market issues in a language that financial professionals can use to communicate to their clients. He is a keynote speaker at many national investment conferences and a frequent guest on CNBC, Bloomberg, and various other financial media outlets. Prior to joining JP Morgan Asset Management, Dr. Kelly served as economic advisor to Putnam Investments. He also served as a senior strategist and economist at SBP Investment Management, Primark Decision Economics, Lehman Brothers, and DRI McGraw-Hill. Dr. Kelly is a CFA charter holder, and he also holds a PhD, Masters in Economics from Michigan State University, and a Bachelor in Economics from University College Dublin in Ireland. I hope you enjoy this conversation with Dr. David Kelly. Okay, so I'm delighted to welcome back Dr. David Kelly. This is, of course, his second time with us, so we're really privileged to have him again. And for those that weren't able to attend his talk last year, I think this is a great opportunity to get to know him, his story, his market insights, and advice for students. So, Dr. Kelly, thank you so much for taking the time.
I'm very glad to be here. Thank you.
So, before we go into your career and your advice for students, Dr. Kelly, I'd love to know, before all the Bloomberg appearances and CNBC appearances, I'd love to know what you were like growing up and what your kind of thoughts were. You know, you decided to study economics at university and then do a master's and PhD. You know, could you kind of bring our listeners and back to the early days in Dublin?
Yeah, sure. So I grew up in Dublin. My father was a politician in Ireland, and he was a lawyer by training and a very good public speaker, and really an excellent public speaker. But I often felt that when he was on TV or when he was making his speech, he was kind of winging it when it came to economics, and I thought that was a problem because honestly, Ireland at the time, this is in the early 1980s and late 1970s, it had a lot of economic problems, and it really needed leaders who understood the economy. And I thought my father was a very honest and smart politician, but I still felt that a little economic expertise would be a good idea. And I also found economics kind of interesting as an idea. So I studied economics in UCD. I did undergraduate economics, and then I realized after doing an undergraduate degree that I had all the questions but none of the answers. So then I decided to go off and do a PhD in economics to get the answers. But I have to say another part of it was just, getting out of Ireland was kind of important to me at the time. It was nothing. I love Ireland, but it's like a big village. And I was definitely seen as my father's son because my father was fairly well known. And what was worse, I was becoming known as my brother's brother because my brother was also getting rather well known. And so I decided, okay, I have to make my way in the world myself. So I went off to Michigan State and did a PhD in economics, and still didn't have all the answers, but I really developed a love of economics. And I found it, over the years, it's a different prism, but through which you can see the world. You can see how the world works through the world of economics. You get a lot of answers to why things are the way they are, and you can also understand stuff which is, you can see when people are, spouting nonsense or who are just trying to sell, enhance their power by selling stupid ideas. You really get a sense of what works and what makes the economy work and what doesn't. And so I've always been fascinated by economics. And I guess the only thing that I would add to that is, growing up, I went to, I did, you went through university and then I went and got my first job. But as a pure economist, it's kind of tough to make a living because nobody really wants to talk to somebody who just thinks they know about the economy. It's kind of like, well, if, for $5, I could buy the Wall Street Journal and I could get the same information. So then I realized, well, I need to have a finance as part of this. So I went to work for various financial firms, got a CFA. And then, over time, I realized, while I wasn't necessarily the world's best economist or indeed strategist when it comes to finances, I had I was reasonably good at explaining this to people. And so I sort of, since then, I've really devoted my career to understanding the economy and markets, but also running a team that does that and really trying to advise investors and advise financial advisors and institutional investors how to invest in the environment and how to understand what the environment's doing. And that's, been endlessly interesting over the years.
So it wasn't from the very beginning super apparent that you would go on to work in a bank. It wasn't that you did consider academia. Yeah.
No, and I mean, I realize, I think back at different points in my life, and I realize that, you may think that you know where you're going to be in 5 years. You really don't. I didn't even know the job that I'm doing existed when I was going to university.
And on that, so a lot of our listeners, myself included, are in final year now, and they're deciding whether to do a master's or, go work directly from the summer internship they were doing, or even an MBA. I'd love to know from your perspective, what would your advice be, on this, having done a master's and PhD? Yeah.
I think for most things in the finance industry, I would not do what I did. I would do something different. So what I did is I went directly from undergraduate in Ireland to graduate school in the United States. And I suppose that does actually kind of make sense because that's probably the only way I could easily get into the United States to get a job in the United States was doing a PhD in the United States and then having my feet on the ground for a few years so I could just deal with the immigration stuff. But so I think from that perspective, it was good. But if I'd been living in the United States all along, knowing what I know now, I would simply have got a great undergraduate degree, the best I could possibly get a great internship, and then just go work. And then I would get that undergraduate degree. I'd add a CFA designation to that. So if you have that added, it's a competitive set of exams. Everybody in the finance industry knows how hard it is to rattle off those exams 1, 2, 3. So if you do that, you're qualified. But also you can really figure out in your first job, do you understand what makes this job, what's making money and what's not making money? Do you understand what's making a difference for your business or not? And it's quite possible. There are plenty of people on my team who've gone from basic and undergraduate degree and some other qualification, but not a graduate degree. They've gone for that undergraduate degree and they're now managing directors and have very successful careers. So I don't think you have to load up on education. I think if anything, it's better to get your foot in the door at the right firm and just impress the hell out of them.
I know a lot of people at Trinity want to go to New York and work there. Could you maybe share your experience of yeah?
Well, it was. I went a way that would actually work pretty well for people, which is I went to graduate school in the United States. So I got an assistantship to go and work to do a PhD in Michigan State, and I did my PhD in applied econometrics, which I found was working for I got a summer job working for the state of Michigan, and I built revenue forecasting models for them, which was actually very interesting from an econometric perspective because you actually can learn a lot about forecasting revenue if you forecast revenues. So I built some models and wrote up a PhD in that, and then I went to work for an econometric forecasting company in Massachusetts, and from there I went to Lehman Brothers, and then went to various other companies and ended up at JP Morgan.
Wow. In those early days of your career, or even now, generally speaking, do you have any kind of books you've read or pieces of research you've read which you found really you've gained a lot of lessons?
Not really. I think the general piece of advice I'd give is be realistic, knock on doors, talk to people. If there's an opportunity, apply for it. I remember, the things that I've regretted over the years are not the things that I did that didn't work out. It was the things that I should have applied for, I didn't apply for. And you know what? It could have worked out fine. It probably would have worked out fine. So it's if the question is should I call this person up or not, call them. Should I text them or not text them? The downside is almost zero if you're polite about it. So generally speaking, just knock on enough doors. A lot of life is by chance. You just happen to walk in the door when they're looking for somebody just like you, and it's the more doors you walk into, the greater are your chances. So just keep shooting at the basket, basically.
Okay. And then away from chance, and looking back at your career and the success you've had, obviously there's so much hard work there and so much more. What would you say your biggest strength has been to that has helped you, gain this success?
Well, I think there are a few things. I think in order to be successful, I think you have to focus on a skill or two, things that you're good at, and focus on that. Um, and so it was a lot of work getting a PhD. I wanted to also overarm myself, so I deliberately had a PhD in economics and a CFA designation. And so if you have that combination, that kind of that says something. So it will get you an interview. But also the thing that I've really, I was lucky enough to get a good education really in when I was going to school in Dublin, in terms of writing as well as math. So I've always been pretty balanced between math and writing. In Ireland, I would have thought, I was sort of seen as being much better at math than writing, but relative to the standards of America, I'm a very good writer because Americans and as the generations have gone on, people have gotten to be worse writers and better at math. So I think being able to communicate really that's the strength I have is being able to communicate both verbally and in writing, and that just comes from doing a lot of reading and perhaps just some natural speaking ability. But that's what's helped me. But ultimately, turning that into a successful career, you have to be disciplined in getting various things done. You got to find ways of proving it in your resume. I mean, there are many piles of resumes and many desks in America. You've just got to make sure that your resume, A, it's in enough piles, and B, it floats to the top. That's really what you got to do.
I definitely want to come back to your communication abilities and your way of writing and so forth. But I'm wondering, were there mentors early on that you had?
I've had various people who've helped me along the way, but I mean, I wouldn't say. I've had some very good bosses who've given me some breaks, and I had a very good boss at the when I was working with the state of Michigan, who basically allowed me get my dissertation done and keep the roof over my head at the same time, which was very useful. And I've had good bosses over the years and some not so great. But I think the most important thing really is having people who believe in you. It's as simple as that. If you have people who believe in you, you can do great things. And I've really, when I manage people myself, I found it actually very easy managing a global group, because a lot of people agonize over, well, what maybe get them fix this or fix that, and generally I expect people to knock the ball out of the park and do an incredible job. I tell them that, then they do it, and that's it. And so usually I think that self-respect and having other people respect you really allows you to do your best, and I think that's really the whole secret to performing at your very best.
And what's an achievement you're most proud of looking back at your career? You've built a global team now, but if you could pick one kind
No,
of.
there's not one specific thing, but I think I've helped over the years. I've helped keep a lot of investors from jumping off the ledge at times of stress, like the dot-com bubble or the great financial crisis or the COVID crisis, or in various elections when people thought the sky was going to fall in. Just helping people see the world in a balanced way, I think has helped people stay invested. And if they stayed invested, it's really helped them build a financial security for themselves. And so I feel good about that.
And you've over 3.5 decades in the industry. You've mentioned you were Lehman Brothers in the '90s. Do you have any you mentioned the dot-com bubble there. Do you have
Yeah,
any
no,
interesting stories you could
I
share?
want to make it clear that I was out of Lehman Brothers long before they destroyed the world.
Of course. No,
But
absolutely. In the 90s.
but
Yeah,
yeah,
yeah.
no, you learn a lot of things from going through these crises. Back I remember the 87 stock market crash, and a lot of people back in 1987, a long time ago, but back in 87, when the stock market fell by 22% in a day, a lot of people thought that this is going to be a repeat of the 1930s. This is like the great crash of the 30s of 1929 ushered in the Great Depression. Was this going to usher in a Great Depression? And we did a lot of work on it at the time. But the major thing we discovered was that despite the fact that the market had fallen and consumer confidence had fallen, consumers were still spending because their wealth effects on consumption were extremely weak at that time. And so, the stock market, the total value of the stock market, we think it was big, but it was only 40% of GDP in the United States. And so when it fell that much, most of the money was felt in retirement accounts, but people didn't even know what's in the retirement account to start with. So it didn't actually stop any spending in the economy. And so the market, the economy kept going, the market recovered, and it was fine. You look at an episode like that, you look at what happened with the dot-com bubble where, the Nasdaq fell by 80%, the overall market fell by 50%. The Nasdaq was too high. The overall market was high, but it was really about technology stocks. So you just realize you needed to be diversified. In every episode, you learn something else about the economy, but there's no end to the learning because the economy over time is evolving. And so the problems that the economy faces today or the way it works today is different from when I started my career.
And what would you say? I know this is a big topic. People in Trinity and the SMF are really interested in. What would you say the biggest lessons from 2008 are?
There are lots of them. One is don't draw a line in the sand when the sand is disappearing beneath your feet. The biggest mistake was the Federal Reserve allowing Lehman Brothers to go under, and the federal government allowing Lehman Brothers to go under. I think that partly this may be because the Treasury Secretary Hank Paulson didn't really like Dick Fuld, who was the head of Lehman Brothers at the time. But for whatever reason, there was just this notion at the time that, oh well, we have to worry about moral hazard. If we bail these guys out, then it's going to send a bad message to everybody. So we're not going to bail them out, and that was a stupid idea. Sometimes when if somebody's too big to fail, guess what? They're too big to be allowed to fail. That's what it means. Don't let them fail. But they let Lehman Brothers fail, and they reap the whirlwind that came after that. So I think that's the biggest lesson. But the second lesson, which is very important today, is that's what caused the immediate crisis. What built up to the crisis, that's what the fuse that blew up the bomb. But the bomb itself was deregulation. I mean, the bomb was allowing people to take out mortgages to buy a house at 100% of the value of the house with no money down. The bomb was allowing people if they paid a little higher interest, to get out a mortgage without proper documentation. These were called liar loans or no doc loans. The bomb was caused by allowing rating agencies to get paid by the companies for whom they were rating baskets of bonds, which is a clear conflict of interest. And then they would rate them all as high quality. And so at each step there should have been regulators saying, look, you want to issue a mortgage to somebody who won't even document their income, you can issue the mortgage, but it is not enforceable in court. There should be some basic standards. Or I don't care if you want home ownership for everybody. It's not safe to have people buy a home with no money down because they can't come up with any money down. Then the first wind that can knock them over is going to take them down. You've got to have people with some financial security. And I think it's important now because, with the new Trump administration, the great bumper sticker is, oh, the economy is going to grow faster because we've got deregulation. And well, deregulation is what built up the bomb.
And touching on that, one of the areas which Trump, well, he's not openly said it yet, but some of his backers have been looking at privatizing Fannie Mae and Freddie Mac, ending the conservatorship. Do you think that would be sort of, risk by?
I don't. It's not a matter of the ownership. I think it can work either way. I think it was, they were taken over because their portfolios were underwater and it was necessary in order to protect the integrity of the financial system. Maybe that's not necessary. I think one of the problems with Fannie and Freddie before it was that bonds issued by Fannie and Freddie were treated as if they had a government guarantee, even though they didn't. But that's for the lookout of the financial sector in general. I think they're probably too big. There might be something that you want to have a less concentrated market in. You've got to think about, well, how can you make sure that you're not incredibly dependent on one or two companies? But I have no problem with that so long as you have proper regulation. And the proper regulation means you have to, in order for mortgages to be recognized in court, you need to have certain basic standards on that loan. You can't just have, because if you allow people to make crazier and crazier loans, then guess what? All the volume goes to the crazy lenders. And the ones who are
Right.
cautious and conservative and sensible about it, they lose all the business. So they go out of business, even though they're doing the right thing. You don't want to penalize people for doing the right thing, and that means you have to restrain people who will be tempted to do the wrong thing.
Okay, and I'd love to shift our focus now to kind of your communication ability. I know a lot of our listeners will be familiar with Notes in the Week Ahead,
Mhm.
and seeing you on CNBC and Bloomberg and so forth, and the podcast as well. But I'd love to know, you mentioned earlier how part of this communication skill comes from a lot of reading, maybe natural ability as well. How do students they develop this and improve their presentation skills in both writing and speaking?
Okay, well, there are a few things. First of all, if you want to be a good writer, read. And don't read, a lot of people try to impress me by all the current affairs and nonfiction books they read about the great financial crisis or whatever's going on right now. I must say that my own reading is almost exclusively 19th century. Or 19th or 20th century. I don't read anything out of this century because if you go back, you say from 1800 to say 1930, the people who wrote in that era wrote the best English ever. I mean, they would never put a word out of place. They had these vast vocabularies which allowed them to say precisely what they meant. And I think that we've gone away from that, and I see a lot of people, even in scripts today, if you watch movie scripts or you read books today, you can see words being used incorrectly all the time. And so, if you want to be a good writer, be a good reader. If you want to make good presentations, the first thing I'd say is ditch the script. Do not come out there with index cards. You're just going to have to go for it. The most important thing you need to realize is that making a speech is 100% in the moment. You can't you can't sort of cling on to the safety net of index cards or looking down at a script. Just throw it away. And you've got to just say what you're saying at the moment, and feel what you're saying at the moment. And you can have some structure in the back of your mind for, okay, I'm going to make this point. I'm going to talk about, growth, jobs, profits, inflation, or whatever, so you can know roughly where you are in the speech. But then just make it up as you go along. And that's by far the most effective way of public speaking. And where people get into trouble is they feel like they're helping themselves out by, well, I'm just going to keep these notes here because I wrote down this really wonderful phrase and I want to make sure I remember to say it this way. Don't. Because every time you say it, you'll say it slightly differently. But so long as you say it as you're thinking it, the power of somebody's face saying what they're thinking when they're thinking it is actually the most powerful thing. That's what humans have evolved to react to that. So ditch the slides, ditch the index cards. The most important, the way people convince people of things is they say things to people in their face with their face, and that's the most effective thing. We were built to naturally respond to that.
Well, I liked the audio of the Notes in the Week Ahead recently, the one you just released, because there was
Yeah.
a sort of performance at the start in a way.
Oh yeah, yeah. It
Unanswered.
was unsustainable. There's you know, you keep using that word. I don't think it means what you think it means. There was Vizzini and Inigo Montoya from The Princess Bride.
I had to play that back because I wanted to see if it was actually an audio player or actually your voice. I said no,
No,
it's
yeah, no. Well, Vizzini is a great character actor, but he has a little bit of a lisp. So he never said unsustainable. He said inconceivable. But because he had a lisp, it makes it funnier. And then Inigo Montoya is a Spaniard, but he can't say the word, so he says word. And
it's,
it's fun.
it's great. Yeah, it's great to listen to the audio version of that sometimes. But I wanted to ask as well. So you have these really big complex ideas as well, touching on communicating an idea effectively, both through speech and writing. You have these fantastic charts in Guide
Mhm.
to the Markets, and
Yeah.
it seems really methodical. I heard an interview you get, a podcast you get, sorry. You talk about the colors you choose and the
Yep.
way you kind of craft these charts. Could you kind of go into a bit more detail about how you're,
Yeah,
making
it's
these?
so we really want to make the point as clearly as possible. So it's what we found is there is a vacuum in Wall Street. There are all these people who are very smart, and there are these people who are very quantitative, but they're not very good at expressing themselves, and they're not very good at getting their point across. And for the point to be gotten across successfully, you have to, not just explain the thing to somebody, but if they can see it, that's that much better. So we think a lot about how to display this, display various points, and these charts are all very simple. We don't use lots of bullet points. We don't put a lot of commentary around it, but we make sure you can use the chart to make the point you want to make. So, if you look at the unemployment rate, it looks like a playground slide. It always goes up more steeply than it comes down, and then it actually slopes down to the bottom like a playground slide does, so you don't end up in the bark mulch. So it's but you can sort of visually see it and get the point across that way. But the thing I'd say about the guide to markets is we've been running the guide to markets for 20 years, and every quarter we get rid of 3 or 4 slides. We put in 3 or 4 new slides and make little tweaks to this one or tweaks to that one. But it's literally an evolutionary process, and I strongly believe in evolution as a business technique, because it's rather than coming up with a grand scheme of this is the thing that's going to move the market. We don't know what's going to move the market. We're going to have all these little ideas all along. So we're constantly sort of working on what makes the point more successful, or makes it clearer. And then we get a lot of feedback. We use this in speeches all around the country. And so just, the audience likes this or they don't like that, or you realize that the annotation of these two lines are crossing. So maybe if you put this one here and that one there, they can see it more clearly. But it's all dedicated to getting your point across more clearly.
And distilling these, if you have a big complex thesis, or rather not even a complex thesis, but just a view on the macroeconomy, how do you distill that so simply in, your writing? Because your pieces are very short, and
You
notes.
always have to think about structure, and it's particularly important when you're dealing with um, sort of a fire hose of information. So, for example, with President Trump's inauguration, he suddenly starts signing all these executive orders and saying a lot of things in press conferences and so forth. And you could just get snowed under by all that information. So, what you have to do is categorize things. Okay, so where was the economy before all these executive orders? And then let's forget about all the cultural ones, because that's, it's politics and you may feel very strongly about it, but doesn't actually move the needle on an investment. So what's important for investments? Well, what he does on tariffs, what he does on immigration, what he does on deregulation, and what he does on the budget, both in taxes and spending. Those are the 4 areas. So you just look at tariffs, immigration, deregulation, and the budget. And so once you've got that structure, then you can it's like coat hangers. And so you can then put your different jackets on that, and then those coats may change over time, and they will change over time. But so long as you've got that structure where you're talking about the economy, and then tariffs, immigration, deregulation, budget, you've got a structure, and that allows you organize the thoughts and come to a logical conclusion. And I think in both in a presentation, but also when people are receiving the information, being able to put a structure around your thoughts, that's really the whole point. That's what the whole idea of a model is. You cannot explain the whole economy and all its complexity. What you have to do is put together a model, show the basic structure of the thing so people can draw logical conclusions from that.
And could we talk about your outlook for 2025? And maybe if
Sure.
we to hone in on one, I know you're not a bigger fan of tariffs. I know the new
Yeah.
administration is talking a lot about this. Could you maybe share to our listeners, your perspective on this?
Well, tariffs are a terrible idea. I mean, a tariff or tariff will make the whole world poor. And I suppose my view on tariffs really comes from my first view on tariffs comes from watching Irish economic history. I mean, from the days of Irish independence in the 1920s, all the way up until the 1960s, Ireland had basically a protectionist policy, and Ireland was trying to protect native industries like native sugar industry, or our own clothing industries and factories, and or we made cars and so forth. So Ireland had a lot of different things and all these very inefficient infant industries within Ireland. But the idea is to put up big tariffs. And of course, we put up big tariffs. Our trading partners, most notably Great Britain, put up their tariffs on Ireland, and Ireland remained very poor. It was only in the 1960s and 70s when Ireland decided to embrace trade with the rest of the world and join the European Union that Ireland completely did a 180 and decided we love free trade. We're going to be all about making it easy for global companies to locate in Ireland and export from Ireland. And Ireland has absolutely flourished economically because of that decision. And so you can see how tariffs restrain a country, reduce productivity, reduce competition, reduce incomes, and how free trade can help a country grow. There are things you need to do to try to make sure that trade is fair, and there are some things and there are plenty of regulations that are necessary in order to, in some cases, protect national interests or and really military interests, military secrets, and things like that. But for the most part, free trade just works. It's just an extension of free market economics, which generally works too. So you've got to be aware of the downside from it, but free trade works, and therefore tariffs, which are simply import taxes mostly levied on the poor, don't work.
Then looking at equities, I know you've mentioned about, you see there could be a broadening of the Mag 7, credit spreads are historically are tight,
Yeah.
historically at elevated valuations. Could you talk about maybe, your perspective of US equities or global equities even
Yeah,
for
so
2025?
first of all, I think a lot of US investors are almost exclusively in US equities or very overweight US equities because they hear nothing but bad about the rest of the world. The US dollar has been going up for many years, and that has amplified the return on US equities for everybody and hurt the return on non-US equities. But there is a valuation gap there, and particularly there's a lot of enthusiasm about mega cap tech companies in the US, and I think there's a bit of a bubble there. There's no similar enthusiasm in Europe about European stocks or in Japan about Japanese stocks. So I think there's some opportunities outside of the United States when it comes to that. And so as an investor, I would want to have the last 2 years have seen wonderful returns in U.S. equities. I'd want to think a little bit more on the risk side and make sure I spread my money around into global equities as well as just U.S. equities. And within the U.S., buy value as well as growth, buy small and mid as well as large. So I think there's a need for, if you can do it without paying too much in the way of taxes, and that's an issue. I think people should diversify right now. With regard to the bond market, it's interesting because yes, you're right, credit spreads are tight, but the overall income flow from fixed income is reasonably okay. I mean, if you can make 5% on fixed income in the US right now, I mean, there's nothing wrong with a 5% return. And the Bloomberg Ag Index of fixed income securities has got about a 5% yield on it right now. So I think that's fine. It's more than you can get in Eurozone government bonds, of course. But I think that that's fine. And even with credit spreads being tight, yeah, I don't expect a recession anytime soon. And a lot of the risk that was in credit markets has moved over to private credit and out of tradable bonds. So the overall credit quality of the high yield market in the US has actually improved. So I'm not that nervous about tight credit spreads. And again, if something happens, you go into recession and those credit spreads blow out, chances are you'll see a fall in treasury yields also. So you may still make it or make some positive return or at least avoid a significant loss on corporate bonds.
And going back to equities, maybe based on your conversations and so forth, you know, is there a catalyst which could cause a diversification away from the US home bias?
Sure.
Or yeah,
Well, so the two there's first of all there's a catalyst that could cause the Mag 7 to fall, which is if you get into a trade war and if the rest of the world perceives that your crown jewel are these seven companies, then why don't you beat up on them? So if Europe and China were to decide that the companies we're really going to beat up on are, and I'm not going to name them now, but you know what are these seven US companies, and we're going to change our regulations to just really hurt them, then that could, cause a very significant issue. So, when you get into a trade war, you got to be careful because you always got to think about, well, the other side's going to start punching too. So where are they going to punch you? I think that's one issue. And then on a catalyst for U.S. investors to invest around the world, it really is the dollar. I mean, the dollar in real terms is almost as high as it was in 1985. It's almost at a 40-year high in real terms, and so it is too high. The U.S. runs a massive trade deficit. If the dollar begins to fall, for whatever reason, and it falls for more than a year, the dollar tends to go up in these long cycles. But if it falls for a year or 2 years, guess what? International stocks are going to see better returns relative to US stocks because of that dollar impact. And if that begins to happen for a few years, people are going to say, well, they'll look at their portfolio and say, well, I'm really glad that my European equity fund did so well. It's a shame that I've only got, 3% of my portfolio in it. Can we add a little bit more there? And so people may see that there's an opportunity in riding the dollar down and riding foreign currencies up.
Time to invest in Irish stocks.
Well, yes. I mean, I'm not going to make a comment on Irish stocks in particular. I don't think there are many Irish stocks that are independent of the global economy anyway. So it's a complicated issue.
And if I could ask one final question on kind of your outlook on the economy and so forth, is there an area, you've written about in October and then just yesterday, about the public debt, the US deficit and public debt, but is there an area of the economy or, even more broadly with markets, which you don't think is getting enough attention? I only mentioned the deficit, public debt, because I don't think it was mentioned enough leading up to the election. What kind of is your biggest concern at the moment, would you say?
Well,
Yeah.
sort of two areas. I mean, I'm worried in the long run about the debt, but I think that if you have higher interest rates for longer and you have a trade war, I do think the tech companies are vulnerable. But there are a lot of companies that I think it's if there's an area that I like in general, it's just what I call boring stuff. The great investor Peter Lynch, who was a legendary portfolio manager at the Magellan Fund, used to love to invest in companies that had boring names that did boring things, but just generated lots of cash. And that is so out of fashion these days. But it'll come back into fashion at some stage because when you have a bear market, people start wondering what's the value of the stuff they own, and then the sort of fairy dust of things like Bitcoin and meme stocks just evaporates, and people want to know that they own something that actually generates genuine income. So I think at some stage boring will be best.
The book recommendation is One Up on Wall Street by Peter Lynch. Learning about, I think I remember you mentioned, one of the companies was this funeral company. He was very passionate writing about it. I mean, you mentioned
All
many
right,
in the book.
that is very impressive. I am now fully impressed by your reading here. Good job.
I mean, just wrapping up as I'm looking at the time, if we can move on to advice for students, actually, whilst we're on the book recommendations, you mentioned 19th century books that you've read, maybe one you're reading at the moment. Is there any you could give us or our listeners?
No,
Or,
just 19th century novels. I mean, I just read things like Thackeray and Dickens and Trollope and that sort of stuff.
okay,
It's just the way they write. And you
okay.
know what? But I do think that it's when I try to write something about the economy, usually I do the math and I go out for a run. And it is just purely passively that all the lateral thinking comes in as to, oh, this is like that. Or the way that people say. I was listening to a speech by Janet Yellen last week. She was making a farewell speech to the New York Economic Association, and she was talking about how our finances are on an unsustainable path. I was saying, but that is so trite because everybody says that, and then it's kind of like Vizzini says, inconceivable. I don't think that's word means what you think it means, and so that's why I decided to write that article that way.
And so also another question I had was, for the first year and second year listeners that are just starting Trinity or
Yeah.
university or becoming interested in finance and economics, how would you advise them to build a worldview? And then a follow-up to that is, you run this large global team,
Yeah.
how do you build your worldview even today? I know you have access to all different economists and the best research out there, but I'd love to get an insight
Well, I
into
think
that.
that they're two different things. I mean, I've got the great fortune of literally working with a global team. So we meet every Monday at 9 a.m. and I drink in what's going on all over the world. And we've got a huge investment bank, and they do research all over the world. So that helps with the world view. But I think if you want to know whether you have a worldview or not, I mean, I read things like The Economist or our own internal research also, and Financial Times is pretty good, Wall Street Journal is pretty good. But I think in my job, it's nice to have a structure, how, in terms of how I think about it. So, one way of building a worldview is to think about it from the perspective of the central bankers. If you go through the world central bankers, the major ones, what are the problems they see in the ECB, in the People's Bank of China, in the Bank of Japan, the Bank of England, and the Federal Reserve, and that's one way to look at the world. That helps with a worldview. But I think that's part of what people need to do. I think people need to learn skills. So learn some econometrics, learn some statistics, get that down, get good at applied econometrics, and actually being able to prove something that somebody else doesn't do. So I think that's one thing. Develop actual quantitative skills, very important. But the other thing is do speech and debate. And I mean, I think Emanuele, you seem to be very adept at asking the questions and expressing opinions, but a lot of people think that they can just do it in writing and do it by the numbers. But no, at some stage in your life, it's going to be vital that you are standing in front of somebody or sitting in a conference room and people are listening to you. And there's nothing like actually doing debate. And it's not something I did, but I should have done. Just, figure out how do you just naturally, instinctivly get people to listen to your thoughts? How do you express a point of view that gets across? Because it'll make your career. If not only do you have the actual, you've got the stuff, you've got the degree, you've got the quantitative skills, but boy, you can actually get your point across too. That's how you build a career. And you have to be the person in the room that people listen to. And I think that comes from expressing your opinion loudly, and don't get scared of it. You may be bad at it to start with, but don't worry, it'll come with you. The one thing people don't realize about public speaking is the more you do it, the easier it gets. After a while, it's no different than you can talk to 1,000 people and talk to one person. It's precisely the same. And once you realize that, then you're a step ahead of everybody else.
Thank you so much, Dr. Kelly, for coming back again. And I really appreciate the time.
Anytime. Very glad to help. Take care.
Thank you so much.
Bye.
You have been listening to the Trinity SMF podcast. You can find more of this podcast on our website, www.trinitysmf.com, and follow us on our social media to find out more about the podcast releases, upcoming events, and much more. Thank you again for listening, and stay tuned.